Uganda Bankers Association is an association of the banks in Uganda, represented by their managing directors. And we have chosen to initiate this financial literacy program to help to improve the understanding of banking services for the general public. We believe that by doing so, we are creating new customers for the banking system who are more knowledgeable, who will gain better service from the banking industry, and who will know their rights and be able to demand that they be treated appropriately by every bank in Uganda. We look forward to your feedback. Please feel free to write to us, to communicate to us through our website, which is Uganda Bankers Association, and also to go to your bank to give feedback through every bank branch or even on the internet. We thank you for working with us to improve the banking system in Uganda. Thank you very much.
Financial institutions in Uganda offer different specialized financial services according to the way they are set up. Commercial banks are referred to in Uganda as Tier 1 financial institutions. Their products are centered on deposits and loans.
The banking industry sells products in form of services. And I would say that there are basically 4 categories of banking products. We have what we call liability products or deposit products, and those are typical accounts. Let's say salary account, a savings account, a fixed deposit account where you deposit your monies. We have loan products, and typically here we are talking about lending products. I could give you a salary loan, a business loan perhaps, or a loan to construct, whatever the purpose is. So that's the second category. The third one I would call in the trade category. Really, traders import, to facilitate trade across countries, export and import. And then the fourth category I would say are electronic, which is a slightly new industry in banking terms. The world is moving ahead with technology, and the banking sector is equally coping up. And today there are very many products, the basic one being, for example, an ATM card, so that you don't have to carry money in the pocket. You can draw money from an ATM. But beyond that, there are internet banking products, mobile banking products, and the whole range of electronic functionalities.
The traditional banking, people used to have only the savings accounts, the normal savings account and current accounts. But with the industry changing and evolving, we have seen that it's no longer a one-shoe-fits-all approach. In the banking sector, banks have taken an approach now of tailoring products to look after customers at different sets of levels. So when you look at the top executives in the companies, they might not go for just the normal current account of just receiving my salary and all that. So we have seen products being tiered at that level, whereby you have people will need things like offshore banking right now, which is now being offered in the market. Things like overdrafts, credit cards, loan ticket sizes of now higher amounts. Previously, banks used to give as low as 5 million or 10 million. Right now, we're talking about 120, 150 million unsecured. We have tailored others products like home loan facilities or mortgages, vehicle and asset financing, leasing. Basically, the approach is to ensure, instead of calling them actually products, what we're looking at is to ensure that we solve the solution, we give a solution to the customer's problem.
Many banks are now focusing their services on niche markets, providing specialized services to particular categories of clients.
There are some commercial banks who have adopted a strategy like corporate banking. Corporate banking, they may be taking, they are looking at big transactions, which may not be for the need of a common man. So for them, they have taken a niche for big transactions because that's where they feel they have comparative advantage. There are also banks which are able to now to offer the same products, maybe up to the lowest person, because they are able to reproduce branches or service points which are able to reach these people.
In providing these products, banks seek to establish mutual relations with their clients.
The banks have a relationship with the customers. I would say a business relationship, where a bank depends on a customer for the deposits, for accessing of loans, for the bank to generate its business. So the relationship of partnership, because there is something they are getting from the bank that the bank is able to provide for them, maybe a return, maybe a source of funding, and then from the bank side, they are providers of our sources of funding for us to be able to generate the other side of the business, the lending side.
Savings products offered by banks helps all individuals of different income levels achieve various targets in their lives.
With the savings, you can achieve quite a number of things. As I mentioned, in life, you cannot get everything in one day. In life, you go getting things one by one because you don't have those resources. If I want to buy a car, a particular type of car, and I don't want strain from the bank loan, I can start saving now. Say if I'm earning 3 million shillings after tax, and I know that my expenses will not go beyond 500,000, and I say, even if my income is this, and I want to drive a particular car, newer, but within my means, I can set aside maybe 500,000 for maybe a period of 1 or 2 years. At a certain time, I'll be able to get that car.
People in businesses have various products offered by banks to help them grow their businesses.
A typical trader, perhaps selling ordinary goods, wants to expand. There may be different needs. He may just want to buy more goods, let's say from Unilever or roofings or name it, Mukwano, just so that if he used to buy worth 10 million, he now wants 20 or 30. What happens there is a typical short-term loan then, because the way we determine that is how quickly he sells the products. Some will sell within a month, 2 months, 3 months. So we could give you a short-term loan of 90 days. Sometimes he may not, and he pays it at once at the end of 90 days, or pays every month 10, at the end of the 3 months he's paid 30. Sometimes he may have some of the money and just needs a top-up. So perhaps he has 20, he needs an additional 10. So the 10 is where you can give an overdraft. So that once he has got the goods and the total 30, he pays, and then as he's selling, he clears. So that's one scenario, very, very short-term loan, under 90 days, 6 months, under 1 year. Sometimes he wants to expand his warehouse. Business has improved, in which case he needs to build the warehouse, which will not necessarily take 6 months, maybe a year or 2, in which case you cannot give him a short term. The period needs to be extended. If you think that he will construct within 24 months, perhaps you give him 30 months. You have to create some allowance just in case there's a delay. Or give him a 3-year loan instead of 24 months. That way he will build, finish it, settle inside for a few months, before then he can start paying, in which case you factor in a grace period for a few months after it started before he starts paying the loan. So depending on the loan purpose, very critical, I wish to tell our customers, it's very critical to indicate the purpose for which you are borrowing, and important that you are honest, because that helps us determine how we structure the facility.
Commercial banks are particularly useful in facilitating international trade for importers and exporters.
Let's say the buyer in Uganda will agree that I want 10 vehicles from Japan. This is the make, this is the price, and up to Mombasa or Kampala, these are the terms. And once I have loaded the cars into a container, perhaps, and I've handed them over to a shipping firm, I need my payment. This is where the banks come in. So the buyer then, importer in this case, will come to the bank and say, these are the terms we have agreed, 10 cars at this price and so on. My supplier is Japan, here is his address, here is his bank. So then we start talking to each other, the banks. We will confirm that yes, this is our customer, he has the ability to pay, and once you have loaded his cars into the container, advise us with the following details and we confirm payment. So that is routed and through correspondent banks, the supplier's bank will get that confirmation and comfort, and in turn gives the seller, in this case the exporter in Japan, the comfort that yes, you can go ahead and load and the transactions will take place.
Despite the high risks involved in farming business, banks also have products for farmers.
The banks can lend on inputs after establishing the farmer's needs and his mainly inflows. How does his inflows come in? Banks also finance on mainly processing of farmers' produce. The farmer may need maybe seeds. I know there may be a few banks which may be willing to take a very big risk and a very big exposure to the area of farming, because sometimes farming is far away from where these banks are and supervision becomes very costly, such that the rate may be higher. But on the basis of societies, the farmers can be able to access funding from the banks. You know, when the bank looks at an organization, there is a confidence built in and also mitigates the risk.
All these services provided by the banking industry have costs which differ.
You pay interest when you borrow a loan. In that interest, you will find a component, a portion of the overhead costs, running costs, but there are also other benchmarks, the cost of that money. Sometimes when we take deposits from the customers, the depositors want an interest. You have to factor all those costs. Even inflation, the normal inflation, you factor all those in. Now, banks may differ. Different banks differ in terms of tariffs and therefore in terms of cost of operations. Some banks that are big and have a large deposit base may be able to attract a lot of deposits which are not necessarily deposits of a fixed deposit type, meaning you have to pay higher interest. You may find that that bank's costs of money are lower and it may have slightly lower tariffs. You may find another bank that is more efficient. It has fewer staff, it has very good technology, so their overheads are not as big. You may find a bank that is very new in the market, they are still struggling to get their feet, costs are very high, they have hardly broken even, costs may be higher. Obviously, as a consumer, I think you would look for the best. You are looking for the best, both in terms of price, but not only in price. Let's say if you want to borrow, you want to see who will give you the most comfortable repayment plan, which fits perhaps within your pocket, the period that you want, and yet is not so expensive, perhaps, and yet the amount they are giving you is enough to cover what you want to do. So at the end of it, you are looking for which one is giving you the most competitive offer.
To benefit fully from these bank products, a client must be open and honest while seeking for these services.
Banking is a relationship. When you are in a relationship, you share as much as possible. So it's very important to share with your banker, because we have seen businesses can go well at some point. Sometimes they can go the other way around. Especially in times when the businesses are not good, it is important to share with your banker that the business is under stress for various reasons. Prices have changed, demand has gone down, different reasons, and businesses will go through stress. If you are not sharing that information with your banker, the banker will continue to think everything is normal. And yet if you had shared, perhaps you can review and restructure the facility, adjust the period, or give a person a short break during the tough time. There are different interventions that to help smoothen the curve. And therefore it's always important. Also, the banker gives you advice. This is a wrong time to approach this one. Wait for this. This season, this price may go up. Don't import now. Wait. That's important information that helps your business.